Let's say I want to become a painter, a carpenter, photographer, drop shipper, or freelance writer. What's necessary to get going? Can I go out and start doing work right now and begin collecting money? Do I need a company? What exactly is a company? We all have several great ideas each hour and love to share those ideas as ours. But in our society, a company really becomes real when you do business with other people. And that company can take many different forms. The main types of companies in the United States are listed here. The most basic form of a company is an individual doing work or selling a product in their own name. That's what's called a sole proprietorship. A sole proprietorship is when someone works for themselves and does business as an individual person without filing anything with the government. A sole proprietorship is not considered a separate legal entity, and the law does not recognize a sole proprietorship as something separate from the person that started it. This means the individual is personally liable for any and all debts, obligations, and other liabilities associated with the business. If two or more people are working together on a business in this same informal fashion without setting up a separate business entity, this would now be referred to as a general partnership. Like a sole proprietorship, the individual owners of a general partnership are personally liable for all debts, obligations, and other liabilities associated with their business, including liability for the actions of their fellow owners. Your business partner opens up a credit card for the business and runs up a $50,000 in debt at a 27.99% interest rate. That's on you. Sole proprietorships and general partnerships are a perfectly legal way of doing business. However, generally speaking, it is not recommended to operate a business like this since you're missing out on personal liability protection and perhaps some pretty solid tax advantages. Personal liability protection is a biggie. Think if you damage something valuable like a window or car while on the job, but the business doesn't have the cash to pay for it out of pocket. Since there isn't an official shield between the business and the owners, your money, your car, your house could now be on the chopping block. What many people do to avoid this is to set up a separate legal entity as their company. Separate business entities in the U.S. take several forms, such as limited liability companies, corporations, and limited partnerships. These entity types are created by filing business formation documents with the state government to formally establish the company. LLCs, corporations, and limited partnerships are considered to be separate from the owners of the business, almost as if they were another person. In other words, a separate business entity has its own tax ID, bank account, writes its own checks in its own name, collects its own revenue, and files its own taxes at the end of each year. Though really you're going to be the one filing the taxes for it, as sadly it won't magically do it on its own. It's like another person, but not one that does taxes for itself. Because these entities are separate from the owners are generally not liable for the company's debts, obligations, and other liabilities because the company now takes that responsibility for itself. This is a huge advantage of using a separate business entity. Not to mention that you can gain many tax advantages by using a separate entity. Remember the damaged car that happened on the job? Now the buck stops with the business. If the business can't afford to pay for the damage, the business can shut down and the owners are protected. A lot of people ask about DBAs. DBAs are not a type of business entity. A DBA is basically a nickname for an existing business. DBA stands for doing business as. It's also sometimes referred to as an assumed name or a fictitious name. Any type of business can have a DBA. If you've decided to start work as a sole proprietor but want to call yourself ABC Tile and have a checking account with checks that say ABC Tile, that's accomplished by filing a DBA. A DBA filing is made with your county or state and puts the public on notice that John Smith is doing business as ABC Tile. It's like when Tony Stark told everyone at a news conference that he was Iron Man, except in this case with paperwork. The same is true if you are using a separate business entity like an LLC If your LLC is technically named International Ice Cream Enterprises, LLC, but you want to look local and do business publicly as Local Ice Cream Shop, you can file a DBA. Plus, you or the business can have as many DBA nicknames as you want. Bob's Barbecue, Bob's Wedding Photography, Robert's Bobbing for Apples. But remember, a DBA is just a nickname, not a separate business entity. So liability still defaults to the person or entity that it's associated with. Some people start their business as a sole proprietorship and then decide it's time to become an LLC or corporation. You can absolutely do that, and it happens often. But keep in mind that when you do that, you basically have to start over from a tax perspective. Taxes are just always ruining the party. You can't just take a sole proprietorship and flip it into an LLC or corporation. You still have to file the LLC or corporation with the state. Get a new tax ID, open a new bank account, and start doing business from scratch with that new entity. So while it's okay to start as a sole proprietorship, don't wait too long to get your formal business up and running. If things start to get real and take off, using a lawyer and accountant to set up your business would be ideal, but they're often very expensive. Whether you need to consult with an attorney or accountant depends on the complexity of your business at the beginning. Are you going to be the only owner? Are there going to be a few owners sharing responsibility and profits in a simple way? There is tons of information on the internet and many inexpensive online business formation services to help you get started. But the caveat to all of this is the complexity of your business. Are there going to be multiple owners that play varying or specific roles in the company? Do you have investors that are putting in substantial cash? Will you immediately hire a lot of employees? Will you immediately want to set up stock options or other equity incentive plans? If any of those are true, it makes the situation more complicated, and it may make more sense to err on the side of speaking with a lawyer and CPA. But again, that's an expensive route to go, so make sure you budget that into your startup costs. At the end of the day, the vast majority of people who are starting a new business will do perfectly fine setting up their business themselves online. You can always change things later. You can start with something simple to get off the ground, then as your business grows or things become more complicated, you can then consult with an attorney and CPA to make changes for the best legal and tax advantages. Typically, if you are planning to use an LLC or corporation, you should plan to get it set up the moment you start doing any real business like collecting money or signing contracts. It's highly recommended to formally get your business set up as soon as you start working with a business partner. You need to start thinking about who has what responsibilities, who gets the final say in decision making, and how profits are distributed. Even though it can be awkward, it's much easier to have that conversation right when you start working together rather than months or years down the road. As a reminder, you can still start with something simple, but it's always best to have something in writing. It's proven time and time again to be a bad idea to simply shake hands and assume everything will be smooth sailing. It won't ever be. Businesses are hard work, and just about everybody has probably heard a story of a business partners, even good friends or family members, fighting over business because nothing was written down. So do the right thing and rip the awkward Band-Aid off right from the get-go. And those are some of the basics involved in setting up a new company. Are there things that were confusing, missed, or need to be expanded on here? Let us know below.